We're going to talk about student loans. I think that's a big word nowadays. Everybody's got student loans. Pretty much everyone I encounter has some sort of student loans. I have people all the way from just graduated up to in their 50s that still have student loans or have taken out loans for their children, maybe Parent Plus loans. So we are seeing student loans across the age bracket, anywhere from recently graduated all the way up to people who are in retirement. So once you graduate from school, or you separate from school, maybe you don't graduate, maybe you drop down to less than half time, and you have federal loans. So everything we're talking about is federal loans mainly. Those loans enter into a repayment period or a grace period prior to repayment. So that's about 6 months, 6 to 9 months, depending on what type of loan you have. So a good example would be you graduate from college, you're going to take a year off, and then you're going to go to law school. So during that year off, you've got your 6 months before you receive your first bill. Then you go into law school, and those loans go into deferment. So you're not paying them. There also could be potentially accruing interest, depending on the type of loan you have. And then you get out of law school, and your law school loans are now in that 6-month grace period, but guess what? You've expired the time on your undergraduate loans, and those need to be starting to be repaid right away. That creates some challenges because now you've got loan payments coming in immediately. You haven't even taken the bar, let alone got your results, let alone gotten a job, and now you're needing to enter into some sort of repayment plan. Or anyone who's just separated from the school for whatever reason or dropped down to a less than half-time status, you're going to start getting a bill very soon after. 6 months goes very quickly. Any separation from the school. So while you're enrolled, everything is in a deferment. You're not being billed for your student loans. But once you have dropped out, decided maybe college isn't for you, maybe you got a good job offer and it's just not worth finishing, that's understandable, but now you need to figure out how to do a repayment on those loans. The first thing that's going to happen is you're going to get a bill for a standard repayment, and you're going to get it in the mail and go, oh my gosh, I can't afford this. And then you're going to pick up the phone and you're going to call whoever the servicer that's been assigned to your loans, whether it's Navient, Great Lakes, Nelnet, all different types of servicers. And you're going to be greeted by a representative who seems friendly and willing to help you. The first option they're going to give you when you say you can't pay your student loans is they're going to offer you a forbearance. And a forbearance means you don't have to make any payments, and you're like, great, I don't have any income, I don't want to make any payments. But they are doing you a disservice. Every year that your loans are in forbearance are worth 3 years worth of payments. Think about that. That's your interest being capitalized on your forbearance. So you're given time for forbearance, which is great if you can't make payments. But what they're not telling you is that you could potentially be on a $0, yes, I said $0 repayment plan as an income-based repayment, paying towards a potential forgiveness in 20 to 25 years. So instead of being on that forbearance, could you qualify for an income-driven repayment plan? Well, the person on the other line isn't going to tell you that. You need to have your stuff reviewed by somebody who knows what they're talking about. As a reminder, Navient does not work for you. They're not looking to give you the best payment. They are looking to keep your loan current. The easiest thing for them to do is put you on a forbearance. So it doesn't require any paperwork on their end. That interest is capitalized, and if we don't know what capitalized means, it means interest turning into principal, right? So all of a sudden, your balance is growing instead of going down. I would contact an attorney that specializes in student loans. You would think, why do I need an attorney for student loans? That seems very simple. Reason being is that you need somebody that's advocating on your behalf. You need somebody who is looking out for your best interests. The person on the other line of that phone is not. There are several ways to get yourself on a plan for the future with an end goal in sight, right? Even if that end goal is 20 or 25 years from now, you at least will have a plan, rather than continually being on a forbearance until your forbearance expires and then trying to scramble and figure out what you're going to do. Meanwhile, your loan has increased substantially. A person who's well-versed in student loan repayments can advise you as to what's going to be the best and why, and also go over standard repayment plans. If you don't want to do income-based repayment because you'd rather just pay them off in the shortest period of time, we can also go over that as well. Primarily, it's an assessment type of review. We need to make sure that you are filling out your documents properly. They're asking for a source of income. There are several sources of income that you can provide. It doesn't necessarily have to be a tax return, but they're always going to tell you it's going to be your tax return. And your tax return might be way more last year than what it would be this year. So first and foremost, providing the correct income proof. That's one step. Do you need to include your spouse's information? That's a case-by-case basis. We need to talk about that. That could impact how much your payment is on your income-based repayment plan. So speaking with somebody who knows the ins and outs of a student loan, inner workings, and what the federal government's looking for in order to provide you with a payment plan is only going to help you achieve your goal. And that's obviously for everyone paying that student loan off at some point or getting some of that money forgiven at some point. You can switch out of forbearance into an income-based plan at any point. I would advise not using your forbearance if you don't have to at all, especially if you have very low income and you could just get on that $0 plan. If you're on a $0 plan, at least it's counting towards something. So get you out of forbearance where you're paying $0 and get you into an income-based plan where you're paying $0, but working on that clock towards your ultimate forgiveness of that money. Some of these people that I'm running into are in no way, shape, or form going to pay back the amount that they owe, ever. Hundreds of thousands of dollars for a degree that's paying $50,000, $60,000 at max. Bankruptcy, everyone says, well, can I get rid of my student loans through bankruptcy? And everybody knows the immediate answer is no. That's not always the case. There are special situations where we could get a discharge of debt. Those cases are very slim and they need to be carefully analyzed, but potentially you could get that debt discharge. Typically it's going to be somebody who cannot work, who is never going to be able to pay back because they are in a situation that isn't going to allow them to ever make any money to pay those loans back. And they had to have attempted to pay that back. There's all sorts of requirements for that. But mainly, what's new is that if you are needing to file a bankruptcy for other debts, you can do a bankruptcy Chapter 13, pay your student loans in your Chapter 13, and take that money away from your unsecured creditors. It's a little convoluted to explain in a short amount of time, but if you're not somebody who qualified for just a Chapter 7, but you could qualify for a Chapter 13, maybe you need to address other debts, you're also having problems with your student loans, we can now address them all in a Chapter 13 bankruptcy, which is a new development that's happened just recently where they allow us to pay our student loan payments in the Chapter 13 bankruptcy. That has just happened within the last couple of months. Let's talk about discharges. An administrative discharge is where you just fill out a form, send it in to the student loan servicer, and your qualifications are reviewed and your debt is discharged. Who would qualify for that? Anyone who is disabled. So if you've become disabled, either maybe a veteran who's gotten 100% disability during service, their student loans are able to be discharged. You could be somebody who has a disability and you've been determined by Social Security to have a disability. That can also be reviewed for an administrative discharge. And that's very exciting because that doesn't necessarily mean you need to do it in a bankruptcy. You can do it outside of bankruptcy with just a form. Other types of forgiveness that I want to highlight. If you are a public service employee, so that could be paramedics, that could be anyone working for the government, teachers working for the county, any public service employee has the option for forgiveness of their student loan. There are specific qualifications that you need to be aware of, and you need to be enrolled in a proper program. I urge anyone who is in a public service role, who is going to be planning on working there or has been there for at least the next 10 years, to have an analysis completed. I recently came across someone who's been a teacher for a very long time, had no idea that this was even an option, and her student loans could have been forgiven about 5 years ago. So instead, she is working towards that now. But if everyone knew about public service loan forgiveness, these people could be getting in those programs immediately and then making that clock towards that forgiveness, which is 120 payments. So that's going to be federal, state, or municipal employees, anyone with a 501c3 nonprofit. Your eligibility is based on your employer status, not the job type. So it's going to depend on who you're working for. If you have any questions, feel free to reach out for we are doing 15-minute consultations. for a quick analysis as to what program you might potentially qualify for. That could really could open some doors that you didn't even know existed, just by realizing who you're working for, how long you've been working for, and realizing that, oh, my loan's in forbearance. If I would have just put it on this public service track, I could be working towards forgiveness. So one of the things you want to know when you're talking about your student loans is what type of loans you have. Some loans are FFEL loans, and those stopped being originated in 2010. The other loans are direct loans. Depending on what type of loan you have, that opens the door for different income-based repayment plans. And you can consolidate from the FFEL loans into a direct loan to take advantage of those other income-based repayment options. That's a big one. Most people don't even know what type of loan they have, if they even know who the servicer is. I mean, most of the time you know who your servicer is because you're receiving bills from them. But knowing what type of loan you have and the ability to consolidate into a different loan opens up a different type of payment plan, maybe a reduced payment plan for you, something less. And a lot of people don't know that, and no one is going to give you that advice. No one's going to say, hey, but you could consolidate to get a cheaper plan. That's not their job. That's one thing that I think somebody who's versed in student loans really is looking for. So knowing what type of student loan you have is important. You can pull your student loan information, and I advise my clients to get that information before they talk to me off of nslds.ed.gov. So you can pull your report. That's going to give you all of the types of loans that you have. That will give me a quick overview of what we're dealing with. Ultimately, until there are some laws saying we can get rid of student loans, the best thing that we can do is get you on a payment plan that is affordable to allow you to free up money for other things like investing into your 401k, making payments to creditors if bankruptcy isn't an option and you need to, make your payments so that you're not in default of repossession or foreclosure. I also want to point out that student loan consequences affect a lot of areas that maybe we're not always thinking about. They can affect your job. If your loan goes into default, if you have a job that looks at credit, a default of your student loan is very bad. It's very negative. You definitely want to get it out of default. Immigration, if you're trying to become a U.S. citizen, student loan debts can affect that. Family law matters, if you're being divorced and your student loans are in default, or joint loans. All these things need to be addressed in order to enter several other areas of law. It pretty much touches everything. If you're a business and you have student loan debts and that's you're being sued, people start Googling your name and it comes up in a, Orange County website, you're being garnished for your student loans, whatever it happens to be. You want to make sure that you get your student loans resolved and on some sort of affordable payment plan so that's not affecting other areas of your life. I would reach out to myself or another attorney who specializes in student loans. We are offering a 15-minute free strategy session to get you on kind of some of the wheels rolling. Where can we go from here? What options are available? Some people might call and they're on a payment plan that's completely affordable and they just want to see what else is out there, but at least we can have that conversation. So we are offering 15-minute consults. A lot of people charge for consultations. Right now we're starting this program off with a 15-minute strategy session and at least get your options laid out for you. I am Sophia Dean. I'm a student loan lawyer with the Orlando Law Group, and I'd be happy to help you take a look at resolving your federal student loan debts.